Session is conducted strictly for educational purposes only. We do not provide financial advice, investment recommendations, or guaranteed profits. Forex trading involves significant risk, and you may lose part or all of your capital. Any trades shown are for learning and demonstration only and should not be copied blindly. Please do your own research and consult a qualified financial advisor before trading. By continuing to watch this stream, you agree that Vaivamm Capital is not responsible for any financial outcomes. Trade responsibly.
Hello everyone, welcome to today's live forex trading section. Today's session will be beginner friendly but also useful for intermediate traders. If you are serious about learning forex, stay till the end because I will explain everything step by step. So today we have several high impact economic news events from the United States that can create strong volatility in forex and gold markets. In this live section, I will explain what these news events are, why they are important, how they impact gold, XAUUSD, how traders should prepare before and after news releases. So please stay until the end because this information is extremely important for anyone trading gold or USD currency pairs. Today, the major economic news are scheduled around 19 market time. It is almost 58 minutes to more. And these are considered high impact news events. The most important news events today include non-farm payroll, unemployment rate, average hourly earnings, private payroll data, and Federal Reserve FOMC Bowman speaks. These events are directly connected to the strength of the US economy and interest rate expectations, which strongly influence the US dollar and gold prices. So let me explain non-farm payroll, which is one of the most important economic indicator. In forex trading, non-farm payroll measures the number of new jobs created in the United States, excluding farming jobs. This report gives us a clear understanding of how strong the US labor market is. And latest release is 9/1/2026, 1 month back. Actual got 50K jobs, forecast is 66 they expect, and previous 56. And now what they are telling is a reading that is stronger than forecast is generally supportive bullish for the USD, while a weaker than forecast reading is generally negative bearish for the USD. Why NFP is important? If job creation is strong, the US economy is strong, the US dollar usually strengthens, gold often falls. If job creation is weak, the US dollar may weaken, gold prices often rise. Non-farm usually creates very strong market volatility and sudden price spikes. Professional traders always monitor this release carefully. And second thing is unemployment rate. Same unemployment rate also shows the percentage of people in the United States who are actively looking for jobs but cannot find employment. This impact to the market. If unemployment decreases, the economy is improving, the US dollar may strengthen, gold may decline. The unemployment increases means The economy is weakening, the US dollar may weaken, and the gold may rise. This data helps traders understand the overall stability of the US economy. Here, what this is telling is the latest release is 9/1/2026 at the last month of January, and actual 4.4 percentage and forecast 4.5 percentage and previous also 4.5 percentage. It is constant at last month, and what they are now expecting is a reading that is higher than forecast is generally negative, bearish for the USD, while a lower than forecast reading is generally supportive, bullish for the USD. Same, this data help traders understand the overall stability of US economy. And the third news is average hourly earnings. Average hourly earnings measure how much employees are earning on average. This data is extremely important because is connected to inflation. If wages increases, consumer spends more, inflation may increase, the Federal Reserve may raise interest rates, the US dollar strengthens, and the gold may fall. The wage growth slows, inflation pressure reduces, gold prices may rises, and latest releases is at same last month 9/1/2026. Actual is 0.3 percentage, forecast is 0.3 percentage, previous is 0.2 percentage. Same here, what they are saying is a reading that is stronger than forecast is generally supportive, bullish for the US dollar. At the same time, while a weaker than forecast reading is generally negative for the US dollar. So this is the high impact news of today. At the same time, FOMC member Bowman speaks. Today, economic news can create major opportunities but also major risks. Successful traders do not chase volatility, they wait for confirmation, follow risk management, and trade with discipline. Forex education and forex trading is not about quick profits. It is about consistency, patience, and proper learning. At the same time, thank you for everyone joining in today live section. Please support the channel. If news has got positive on USD, US economy data is strong, economy is performing well, employment is strong, inflation pressure increases, Federal Reserve may increase interest rate, and that the result is US dollar becomes stronger. Impact on gold. Gold usually moves opposite to the US dollar. This is DXY, dollar index. If USD becomes stronger, gold price usually falls because investor prefer strong dollar instead of safe haven gold. Example, non-farm payroll higher than expected, unemployment rate lower than expected, market reaction is USD's strong bullish move. At the same time, gold is bearish movement. When news is negative, worse than expected, impact on US dollar. If economy data is weak, economy slowing down, job market weak, inflation pressure reduces, Federal Reserves may reduce interest rates, US dollar became weaker, impact on gold is when USD weakness, gold prices usually increases because investors move money into gold as safe haven asset. Example, if non-farm payroll lower than expected, unemployment rate higher than expected, market reaction, US dollar weak and bearish, and gold should be bullish movement. Simple professional rule, strong US economy, gold will up, gold will down, sorry, US dollar will up. Weak US economy, gold will down, sorry, gold will up, US dollar will down. So there is very high impact news at the time of 19. So we have to wait for the news. Before news, we don't want to do trading because market is in uncertainty too. We have to take a prediction on that until we can discuss about Forex education, how institutions trade news with including smart money concept. Institutional trades are included like banks, hedge funds, central banks, investment firms, market makers. These institutions control most of the money in the forex market. They do not trade news the same way retail traders do. Institutions follow three main phases during news trading: pre-news posting, news liquidity collection, post-news real direction. Let me explain each step clearly. Phase 1, pre-news posting. Before major news like non-farm payroll or interest rate decision, institutions already have a market bias. They analyze economic trend, inflation data, central bank policies, market sentiment. Institutions usually start building positions slowly before news release. What retail traders do? Retail traders usually wait for news result and then rush to trade. What institutions do? Institutions prepare positions early but do not move price aggressively yet. They need liquidity first. Understand? What is liquidity here? We have to grabbing the liquidity. So phase 2, news liquidity collection. This is the most important part. When news release, market suddenly becomes very volatile. Price moves quickly in both direction. This is not random. Why institutions create sudden moves? Institutions need liquidity to enter large trades. Retail traders place stop loss orders, breakout orders, panic trades. Institutions push price to trigger stop losses, triggering stop losses, trap breakout traders, collect liquidity. This is called liquidity sweep, stop loss hunting. Example, before news, market look bullish. For example, before news, market look bullish. During news, market suddenly drops strongly. Price suddenly drops strongly. Retail traders panic and sell. After liquidity collection, institution push price upward in real direction. Phase 3 is post news real direction. After liquidity is collected, institutions move market internal direction. Trend becomes clearer, volatility becomes controlled. This is when professional traders enter safely. So don't trade blindly while market going on against with you. So institutional news trading strategy is institutions follow these rules. They avoid trading exactly at news release because volatility is unpredictable. They trade after liquidity sweep. They trade after liquidity sweep. They wait for stop loss hunt to finish. Understand? They follow market structure like breakout structure, trend confirmation, strong order zones. They trade with risk management. Institution focus on consistency, not gambling. If trading is gambling means why banks are doing trading? Why banks are investing in stocks? Why banks are investing in markets? So professional news trading tape, instead of trading news instantly, wait for 10 to 20 minutes after news, identify the liquidity sweeps, follow confirmed trend. How to identify institutional moves, sudden spike in opposite direction, that is the first thing, and fake breakout and strong reversal candle and break of structure after spike. Real institutional mindset is institutions mainly focus on market liquidity, where the price will end up on and on, long term positioning, risk control, and patience. Institutional traders do not react emotionally to news. They use news events as opportunities to collect liquidity and enter large positions. Successful retail traders must learn to trade like institutions by waiting for confirmation, understanding liquidity movements, and following proper risk management. This is about liquidity sweeping and before and after the newses. And let's discuss about what is Forex. Let's discuss about what is Forex. So this is the question I am asking, what is Forex? Quite simply, it's the global financial market that allows one to trade currencies. What is the currency pairs? Currency is nothing but, for example, if you think one currency will be stronger versus the other and you end up correct, then you can make a profit. Once upon a time, before a global pandemic happened, people could actually get on aeroplanes and travel internationally. If you have ever traveled to another country, you usually had to find a currency exchange booth at the airport, right? And then exchange the money you have in your wallet into the currency of the country you are visiting. You go up to the counter and notice a screen displaying different exchange rates for different currencies. An exchange rate is the relative price of two currencies from two different countries. You find Japanese yen and think to yourself, wow, my $1 is worth 100 yens and I have $10. I'm going to be rich. When you do this, you have essentially participated in the Forex market. You have exchanged one currency for another. Or in Forex trading terms, assuming you are an American visiting Japan, you have sold dollars and bought yens. Before you fly back home, you stop by the currency exchange booth to exchange the yens that you miraculously have remaining. Tokyo is expensive and notice the exchange rates have changed. It's this change in the exchange rates that allow you to make money in the Forex exchange market. So again, what is Forex market and what is Forex? The foreign exchange market, which is usually known as Forex or FX, is the large financial market in the world. The FX market is a global decentralized market where the world currencies change hands due to the wide range of market participants, including central banks, financial institutions, corporations, hedge funds, and individual traders. Exchange rate change by the second, so the market is continuously in flux. Only a tiny percentage of currency transaction happen in the real economy involving international trade and tourism, like the airport example above. Instead, most of the currency transactions that occur in the global foreign exchange market are bought and sold for speculative reasons. Currency traders, also known as currency speculators, buy currency hoping that they will be able to sell them at a higher price in the future. Compared to the measly $20 billion per day volume of the New York Stock Exchange, NYSE, the foreign exchange market looks absolutely enormous with its 7.5 trillion transaction of dollar per day trade volume. This is the Forex market, the largest stock market in the world. The New York Stock Exchange trades a volume of about $20 billion each day. If we used at least New York Stock Exchange in the news every day on CNBC, on Bloomberg, on BBC. Heck, you even probably hear about it at your local gym. The New York Stock Exchange is up today, blah, 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 blah. When people talk about the market, they usually mean the stock market. So the New York stock market sounds big, it's loud and like to make a lot of noise. But if you actually compare it to the Forex market, it would like this. Oh, the New York Stock Exchange looks so funny compared to the Forex market. It does not stand a chance. Markets makes you wonder if the S in NYSE stand for stock or for scrutiny. The cryptocurrency market is even pioneer. The huge 7.5 trillion number cover the entire global foreign exchange market. But the spot market, which is the part of currency market that relevant to the most forex traders, is smaller at a 2 trillion transaction dollar per day. And then if you just want to count the daily trading volume from retail traders, that's US, it's even smaller. It is very difficult to determine the exact size of the retail segment of the FX markets, but it's estimated to be around 3 to 5% of overall daily FX trading volumes, or around 200 to 300 million, probably less. So you see the market is definitely huge. That is the mostly Forex market, but not as huge as the others would like you to believe. Don't believe the Forex is a 7.5 trillion market hype. The huge number sounds impressive, but a bit misleading. You don't like a exaggerate, we just keep it in a real. The Forex market is open 24 hours a day and 5 days a week. This is the foreign exchange currency pairs. Only closing down during the weekend. So unlike the stock market or bond market, the Forex market does not close the end of each business day. Instead, trading just shifts to different financial centers around the world. This is the Forex regarding. And what is traded in Forex? The simple answer is money, specifically currencies. Specifically currencies in Forex, because you are not buying anything physical. Forex trading can be confusing, so well, use a simple but imperfect analogy to help explain. Think of buying a currency as buying a share in a particular country, kind of like buying share in a company. The price of the currency is usually a direct reflection of the market's opinion on the current and future health of its respective economies. In forex trading, when you buy, say, the Japanese yens, you are basically buying a share in the Japanese economy. You are betting that the Japanese economy is doing well and will even get better as time goes. Once you sell those shares back to the market, hopefully you will end up with a profit. In general, the exchange rate of currency versus other currencies is a reflection of the condition of the market's country's economy compared to the other economies. By the time you graduate from this forex section, you will be easier to start working with currencies. And they are called the major currency pairs: Euro, USD, Japanese yen, GBP, Great Britain pound. This is the Euro USD. Euro is pairing up with USD. and GBP USD and USD JPY. Currency symbol always have three letters where the first two letter identify the name of the country and the third letter identify the name of the country's currency. Usually the first letter of the currency name, if you go to the European means euro, euros, currency codes. By 1973, the International Organization of Standardization ISO established the three letter codes for currencies that we use today. Take USD example, United States dollar. Easy enough, right? The currency included in the chart above are called majors because they are most widely traded ones. Did you know the British pound is the world oldest currency that still is dating back to the 8th century? The newest currency is the world in Zimbabwe gold (ZIG), made official on April 8, 2024, which replaced the Zimbabwean dollar. We would also like to let you know that bug is not the only nickname for US dollar. 100 bucks, 1000 bucks, $100, $1000. There are also greenbacks, bones, benjis, benjamins, cheddar, pepper, loot, skrilla, cheese, bread, mola, and cash money. So if you wanted to say, I have to go to work now, instead you could say, I got a bones, gotta make them benjison. Next, how to buying and selling in currency pairs. What is forex trading? We discussed that before. What is forex? Forex trading is the simultaneously buying of one currency and selling of another. Currencies are traded through a forex broker or CFD provider and are traded in currency pairs. Currencies are quoted in relation to another currency. For example, Euro USD or the Great Britain pound or GBP JPY. When you trade in the forex market, you buy or sell in the currency pairs. Imagine each pair constantly in a tug of war, with each currency on its own side of the rope. An exchange rate is the relatively price of two currencies from two different countries. Exchange rates fluctuate based on which currency is stronger at the moment. These are three categories of currency pairs. One is the major currencies, and second one is the crosses, and third one is the exotics. The major currency pairs always include the US dollar. Cross currency pairs do not include the US dollar. Crosses that involve any of the major currencies are also known as minors. Exotic currency pairs consistent of one major currency and one currency from an emerging market. Major currency pairs are Euro USD, GBP USD, USD JPY, USD CHF, USD CAD, AUD New Zealand USD. The majors are the most liquidity in the world. Liquidity is used to describe the level of activity in the financial market. In Forex, it's based on the number of active traders buying and selling a specific currency pair and the volume being traded. The more frequently traded something is, the higher its liquidity. For example, more people traded the Euro USD currency pair and the higher volume than the odd USD currency pair. This means that Euro USD is more liquid than odd USD. Major cross currency pairs or minor currency pairs that include any two of the major currencies except the US dollar are known as cross currency pairs or simple as the crosses. Major crosses are also known as minors. While not as frequently traded as the majors, the crosses are still pretty liquid and still provide plenty of trading opportunities. The most actively traded crosses are derived from the three major non-US currencies: Euro, Japanese yen, and Great Britain pounds. And recently, our governments are introduction of currencies BRICS. BRICS is the acronym coined for the association of six major emerging national economies. Economies like Brazil, Russia, India, Indonesia, China, and South Africa. Originally, the first four were grouped as a BRIC or BRICS. BRICS was a term created by Goldman Sachs to name today new high growth emerging economies. BRICS is the term created by the OECD when it added Indonesia and South Africa. For example, country Brazil, currency name is BRL, currency code BRL, currency name is REAL, real, and Russia, currency name is ruble, currency code is RUB, and India, currency name is rupee, currency code is INR, and Indonesia, currency name is rupiah, country code is IDR, and China, currency name is yuan, currency code is CNY, and South Africa, currency name is rand, currency code is JAR. And BRICS, actually at the September 2023 BRICS summit, leaders announced an expansion of the bloc by inviting 6 new countries to join as few members from January 2024. Argentina, Egypt, Ethiopia, Iran, Saudi Arabia, and the United Arab Emirates. However, following Argentina's change in government, it ultimately declined the invitation. As a result, Egypt, Ethiopia, Iran, Saudi Arabia, and the UAE joined the original BRICS group. Brazil, Russia, India, China, and South Africa, bringing the total to 10 members. In January 2025, Indonesia was officially admitted as a full member, expanding the group of 11 countries. The BRICS plus countries vary significantly in their economic and demographic impact, but their combined influence has grown substantially. The expanded BRICS Plus group now represents approximately 46% of global GDP, adjusted for purchasing power, and about 54.6% of the world population. In the addition of full members, BRICS introduced a partner country category in October 2024. 9 countries have been granted partner status: Belarus, Bolivia, Cuba, Kazakhstan, Malaysia, Nigeria, Thailand, Uganda, and Uzbekistan. Nigeria, Africa's most populous country, joined as partner on January 17, 2025. With over 30 countries expressing interest in joining BRICS either as member or partner, the group's economic and political importance is likely to continue growing in the coming years. Summary: well, there was a lot of information on currencies. but you just raised your FX IQ points. Let's summarize. When you have learned a series of questions, what is a currency pair in Forex? A currency pair is a pairing of currencies where the value of one is related to the another. For example, GBP USD, Euro USD is the value of British pound related to the US dollar. What are the major currency pairs? Major currency pairs are those include the US dollar and are the most frequently traded. There are seven of them: Euro USD, USD GPY, GBP USD, USD CAD, USD CHF, AUD USD, and New Zealand USD, NZD USD. What are the currency crosses? Currency crosses are the most frequently traded currencies that do not include the US dollar in their pairing. Crosses included Euro GBP, Euro CAD, GBP JPY, Euro CHF, Euro JPY, etc. How many currency pairs exist? There are hundreds of currency pairs in existence, but not all can be traded in the forex market. The United Nations currently recognize 180 currencies. If you were to pair each currency up with another, it's a lot. I think did this content help you a lot? You contribute, it will enable us to keep providing for our support. And let's talk about forex market size and liquidity. And we have to check the time once. And there is the high impact news on 7 o'clock. There is 23 minutes remaining. We have to wait for the news. We have to go to for XAUUSD because we have to do analysis. Welcome to the team. We can come from top-down analysis. First of all, we have to go day time frame. Market. Let's go to the 4 hour. If you see the 4 hour market is struggling to break and sustain above 5,100. Okay, all right. Let's talk about the current market gold situation. Right now, gold XAUUSD is trading around the 5080, 5082 price level. And the market is preparing for one of the most important economic events, which is the non-farm payroll release. This is a news high impact US economic event, and it usually creates strong volatility in the market, especially in gold and USD currency pairs. Current gold market structure from a technical perspective, gold recently experienced a strong bullish rally followed by a sharp correction. Currently, the market is showing sign of recovery and consolidation near 5080 zone. Important price zones, immediately resistance area is 5100. There is a liquidity here. 5150 is also zone. Support area is around 5000. 4950. This is the support zone. Already market is respect to our support zones, support levels. Major support level is 4700 because this is the liquidity zone. This is the major support zone 4700. Right now market is trading closely to resistance, which means that market is waiting for a strong fundamental catalyst and NFP can act as that catalyst. Market sentiment before NFP, before major news event like non-farm payroll, institutions usually reduce aggressive trading and wait for confirmation. That is why the market often moves sideways or consolidates before the news release. At the current price of 5080, 5082, gold is sitting in a decision zone. The next strong movement will most likely depend on the non-farm payroll data. Possible market reaction during non-farm payroll. Scenario 1, if non-farm payroll data is strong, positive for US data, if the job numbers can higher than expected and unemployment decreases, this means the US economy is strong. US dollar will likely gain strength. Gold may face selling pressure. There is 18 minutes more. In this scenario, gold can reject resistance and move towards support zone around 5000 or even lower levels. And we can do scenario if non-farm data is weak, negative US data, if job numbers come lower than expected and unemployment increases, this means economic weakness, US dollar may fall, investors may move money into gold as safe haven asset. Gold can break above resistance and move toward higher zones like 5150 and possibly higher. On the time institutional trading behavior during NFP, professional institutions usually do not enter trades immediately during the news. They often allow the market to create liquidity. The retail trades react emotionally, enter positions after volatility settles. This is why professional traders usually wait for confirmation after the initial news spikes. So non-farm payroll is not a small news. This is a very high impact news. We have to see and observe. There is 16 minutes more. Go to the lower time frame. 5000 is our support zone because here is the liquidity. At the current price level, if price breaks above 5100 with strong momentum and a hold above resistance, bullish continuation is possible. If price reject near resistance and shows bearish confirmation, and definitely market will reject the price and continuously fall to the support zone. That is the scenario. If price reject near resistance and show bearish confirmation, market may move back towards support level. During NFP, avoid over trading, use smaller lot sizes, always use stop loss, wait for clear confirmation. Remember, survival in the market is more important than catching everyone, every move, everything. Today's non-farm payroll event can create major opportunities, but is also comes with high risk. Successful traders focus on patience, discipline, and confirmation rather than emotional trading. Right now, gold at 5078 is sitting in a key decision zone, and the next direction will likely depend on the non-farm payroll result and institutional market reaction. On the 4 hour time frame, gold is currently trading around 5073, 5080 zone, and this level is acting as a decision area of the market. From the 4 hour market structure, we can clearly see that gold previously created a strong bullish move, followed by a sharp correction. After that correction, the market is now showing consolidation and recovery behavior. This tells us the market is currently waiting for a strong fundamental catalyst, and the non-farm payroll releases is likely to decide the next major direction. From a technical perspective, the overall higher time frame trend is still attempting bullish recovery. Price is currently testing resistance around the 5100 zone. The nearest support is located around 5000 to 4950. This means gold is currently trapped between key supply and demand zones. Before major news event like NFP, institution usually slow down aggressive trading activity. They allow price to consolidate and build liquidity. Right now, the market is showing the type of behavior on the 4 hour time frame. Large players are likely waiting for news results before committing to major positions. There is 12 more minutes to the non-farm payroll, unemployment rate, average hourly earnings news. At the current price of 5073, the market is sitting in the middle of the range, which means the next strong directional move will likely depend on the upcoming NFP data. Market behavior before NFP. Before major news events, institutional traders usually allows the market to remain unstable and collect liquidity. This is why we often see small pullbacks, sideways movement, sudden short spikes. Right now, gold is moving around 5078 and 5080. Suggests that institutions are waiting for confirmation from the news release. So we have to wait 8 more minutes. If NFP numbers come stronger than expected and unemployment drops, usually dollar will likely gain strength. Gold may face selling pressure. In this scenario, if gold fails to hold above the 5080 resistance zone, we could see price moving down towards the 5050 support level and possibly toward the 5000 psychological level. If NFB data comes weaker than expected, US dollar may weaken, investors may move into gold. If gold gains bullish momentum and breaks above 5085 to 5100 with strong candle, then continuation toward higher resistance levels becomes possible. We have to see gold gains bullish momentum above 5100. And also liquidity movement will be warning while NFP. At this current price level, professional traders are not guessing direction. Instead, they will wait for breakout confirmation, observe candle closure near key zones, follow market structure after volatility settle. We have to wait for the news. 6 more minutes. At Vaivamm Capital, we believe capital protection is the first step toward trading success. Profit follow traders who learn to protect what they already have. Vaivamm Capital is not just about trading profits, it is about building disciplined traders who understand the true value of capital and don't chase profits, protect capital. Success will automatically follow you. All right, everyone, we are now approximately 4 minutes away from the non-farm payroll release, which is one of the most important economic event of the forex market, especially for gold and US dollar pairs. At the moment, the market is entering a very sensitive phase where volatility can increase very quickly. Current market situation around the recent price zone, and we are seeing cautious momentum in the market. This is very normal before high impact news. Institutional trades are usually not entering aggressive positions right now. Instead, they are waiting for the news data to create liquidity and confirm the market direction. Non-farm payroll measures the number of new jobs created in the United States, and it gives a strong indication of the strength of the US economy. Strong job growth usually supports in the US dollar, while weak job growth usually supports for gold. If NFP data comes stronger than expected, US dollar may gain strength, gold may face selling pressure. If the non-farm payroll data come weaker than expected, US dollar may weaken, gold may gain bullish momentum again. So we have to wait. Non-farm payroll forecast expecting 66K, previous got 50K, and we have to wait for actual. There is 3 more minutes to count down. Two more minutes. 1 minute 20 seconds. Thirty seconds to more to release the data. Market started volatility. Five, four, three, two, one. All right, NFP came positive for USD. Gold may face selling pressure. Gold is in first, 5050. This is the high volatility. All right, the NFP data has been released. We are now seeing immediate market reaction. This is the moment when volatility usually increases sharply and price can move very fast in both directions. Right now, traders should avoid emotional decisions and focus on observing how the market reacts to the data. All right, traders, the NFP data has officially been released, and this is very important for the US dollar and gold market. Let's break down the numbers and understand how this affects XAUUSD. Non-farm payroll actually 130K, forecast 66K, they expected previous 48K. And market right now is 5053, the level. This is a very strong positive surprise for the US economy because job creation is almost double the expected value. And unemployment rate, this is also, it shows improvement in the employment conditions, which is also positive for US dollar. And average hourly earnings, this is also got 0.4% actual forecast, they expect 0.3%. Higher wages indicate stronger economic activity and possible inflation pressure. And private payrolls also same. This is also very strong and confirms positive labor market strength. What this means for XAUUSD? Overall, this NFP data is very strong for US dollar. When the US economy shows strong job growth, investors prefer holding US dollar. Bond yields usually increase. Gold usually faces selling pressure. Because gold is a safe haven asset, it tends to move opposite to USD strength. Gold may show bearish pressure, sellers may dominate in the short term, volatility may remain high. Once we can check DXY, dollar index, see how dollar index will move upside. From 96 onwards, it will be single spike, it will be go to 97.239. This is the call USD strengthen. Gold may little bit not, gold will be, sellers may dominate in the short term. Wow, wow, wow. Institutional traders usually do not react emotionally to news, allow price to spike. See how dollar index react, how XAUUSD react. This is the correlated in the market. At Vaivamm Capital, we always remind traders news create volatility, but discipline creates consistent. Protect capital first, profit will follow. Gold started selling. Gold breaks the support level 15050 and next support level is 5000. Gold is currently trading around 5043, 5030, 5020, and it again back to 5050. And we are seeing clearly market reaction after the strong NFP data release. As we discussed earlier, the non-farm payroll numbers came out very strong for the US economy, which naturally strengthens the US dollar and creates selling pressure on gold. Current market behavior right now, price dropping towards 5022 shows that sellers are stepping into the market. This is a typical reaction when economic data supports to USD strengthen. Gold is a safe haven asset. So when the US economy shows strength, even investors usually reduce gold exposure and shift towards dollar-based assets. What we are seeing now is very common during high impact news like NFP, trigger liquidity, push price aggressively, capture stop losses, then decide the real direction. So traders must stay patient and avoid emotional trading. At this moment, traders should closely monitor 5000 psychological level, very important support, 4980 zone, possibly liquidity zone area, 5050, 5080 zone, short-term resistance. Price reaction around this level will decide the next move. If price sustained below 5020, sellers may push gold, gold towards lower support zones. If buyers step in and price reclaim 5050, we could see short-term recovery or consolidation. Remember traders, news trading is not about predicting direction. It is about understanding volatility and protecting capital. Market grab the liquidity. All right, traders, we are seeing an interesting development in gold right now. After the strong NFP data initially pushed gold lower, price has now recovered and is trading around 5050, 5052. This shows the market is currently going through post-news volatility adjustment, which is very common during NFP releases. Even though the NFP data was strong for the US dollar, gold is showing short-term buying pressure. This usually happens when early sellers take profits, institutions collect liquidity, market balances after initial reaction. This does not immediately confirm a bullish trend. It simply shows that the market is stabilizing after heavy volatility. Professional traders and institutions rarely trade the first news spike. Instead, they allow price to create fake breakouts, capture stop loss from retail traders, enter trades after confirmation. If current move towards 5050 may be part of liquidity collection or short-term recovery. Important price levels to watch. Right now, these zones are very important. 5080. These levels are very important. Five zero eight zero, 5100. 5080 to 50110, 5100 zone, major resistance and liquidity area. Sellers may become active here. 5020, 5000 zone, strong psychological support. If price drops below this area, bearish momentum may return. Again, 5020 to 5000 is the psychological zone. Scenario 1, bullish confirmation. If gold holds above 5050 and shows strong bullish momentum, price could test higher resistance zones. Scenario 2, bearish rejection. If price gets rejected near resistance, we may see another downtrend movement as USD strength still exists fundamentally. Right now, gold is showing a classic post-news retracement phase. The real direction will be decided after market structure confirms either buyer strength or seller dominance. Patience is extremely important in these situations. At Vaivamm Capital, we always say the market rewards patience, not panic. Protect your capital, wait for confirmation, and consistency will follow. All right, gold is currently trading around 5060, and we are seeing continued recovery after the initial NFP. Earlier, strong labor data punished gold lower, but now price is gradually climbing, which indicates that the market is entering a liquidity balancing phase. The move towards 5060, 5066 suggests short-term buying interest. However, traders must understand this carefully. Sellers are taking profits, buyers are stepping in for short-term momentum. Institutions are positioning for the next directional move. This is still not full bullish confirmation. We have to wait. During high impact news like NFP, push price down to grab liquidity, reverse price to trap sellers, build positions after volatility settles. The current move could be part of the liquidity cycle only. We have to wait for the major resistance area 5080, 5100 zone. If price reaches this zone, strong reactions are possible. Now acting as immediate short-term support is the 5050. Major psychological and liquidity support is 5020 and 5000 zone. Major psychological and liquidity support. Now acting level is 5050 is the support level. Support is a price level where the market usually stops falling and buyers and start entering. It acts like a floor in the market. When price reaches support, demand increases. Buyer, because of buying pressure, price often moves upward. For example, if gold keeps falling and stop around 5000, that level becomes support because buyers are willing to buy at that price. So here short term is confirmed in 5050. On resistance, what is resistance? Resistance is a price level where the market usually stops rising and the sellers start entering. It acts like a ceiling in the market. When price reaches resistance, supply increases. Because of selling pressure, price often moves downward. Example, if gold keeps rising and reverse near 5100, that level becomes resistance because sellers dominate there. So we can expect downtrend like this because USD strengthen, right? Horizontal support and resistance lines, most common type based on previous highs and lows created by the moving average or trend lines. Psychological levels are round numbers like 5000, 5100, 5200. Traders naturally react around these levels. Traders look for buying opportunity near support with confirmation. Sell strategy, trader look for selling opportunities near resistance with confirmation. Important professional rule, Support and resistance are zones, not exact lines. Market can slightly break these levels before reversing. This is called liquidity sweeps. Here we can observe this is called liquidity sweeps. This weeks we can call liquidity sweeps. Break support temporarily, trigger stop losses, then reverse market direction. Retail traders often get trapped here. That is called institutional secrets. Current XAUUSD example 5000 is the strong psychological support, 5050 short term support, 5080 5100 is the resistance zone. Market reaction around this level decides trend direction. My suggestion is never trade support or resistance blindly. Candle confirmation, market structure shift, volume or momentum confirmation. Support and resistance are not just price levels, they represent the battle between buyer and seller. The side that wins control the market direction. Step 1, start from higher time frame. Professional traders always start from higher time frame because it shows real market direction, like monthly, for example. You can go to 1 month, take an higher, take a lower, and after go to the week. This is called top down analysis. And daily time frame. Higher time frame levels are stronger and respected by institutions. Because higher highs, higher lows, lower highs, lower lows. It helps identify uptrend, downtrend, consolidation. Market has three trends, right? One is uptrend, one is downtrend, one is consolidation and sideways zones. That is called. Mark liquidity areas, equal highs. This is the equal high, right? At the same time, equal lows, and go to the 4-hour time frame. This is the equal levels. Previous swing high and previous swing lows. Use lower time frame for entry. After marking higher time frame zones, move to 15 minutes, 5 minutes, 1 minute for scalping. We go to the 15 minutes means what we are seeing here. Market is respecting our support level zone 5050. There is a short term basis. And if you go to the lower time frame of 5 minutes, Market already created. So 5100 is the major resistance zone. 5050 is intraday support. This is for intraday support. 5050 level is intraday support. 5000 is the strong psychological level. Here there is liquidity too. Professional traders do not mark charts to predict the market. They mark charts to understand where institutions are likely to trade. Gold is currently trading near 5070, which is an important intraday zone. After high NFP volatility, market is currently in decision phase between buyers and sellers. Institutions never enter blindly. They create two-sided trading plan. One is bullish plan and one is bearish plan. Bullish trade entry plan. Conditions for buy setup if gold hold above 5050 support, breaks and close above 5080 resistance level, shows strong bullish momentum. And if you take bearish trade plan, if gold fails to break 5080 level, shows strong rejection near resistance, breaks below 5050 support, and we can plan sell entry. Sell below 5050 confirmation break. Target is 5020, and the target 2 is 5000 psychological level. Stop loss advice for above 5085. Why this sell plan? Strong USD fundamentals, possible liquidity sweep above resistance, institutional rejection possibility. Right now, gold is trading in a decision zone around 5070, 5066. The market will reveal its direction based on whether price breaks resistance or losses support. Professional traders prepare both bullish and bearish plans instead of predicting direction. At Vaivamm Capital, we don't chase the market, we wait for confirmation, protect capital, and trade with discipline. Gold is currently in a mid zone. 5066 is not a strong support and not a confirmed breakout level. So direct entry here is risky. So professional traders wait for confirmation. Take buy only if price hold above 5050 support. Price breaks above 5080 with a strong candle close. You have to plan buy entry. If price hold above 5050 support, if price breaks above 5080 level with strong candle, gold is now moving closer to the major resistance zone 5080, 5100. This is a very sensitive decision area. Market may either break out or reject. Take buy only if price gives strong candle close above 5080. Momentum and volume increase, no immediate rejection. Buy setup entry above 5080 and target 1 is 5100. Target 2 is 5120, 5140. Stop loss below 5055, 5075. Sell plan price shows rejection between 5075 5085. Strong bearish candle forms, price fall to sustain above resistance. After rejection, confirm below 5070. Target 1 is 5050. Target 2 is 5020. Stop loss above 5090. Right now, institutions may push price slightly above resistance, trap breakout buyers, then reverse market or break resistance strongly, continue bullish momentum. So confirmation is extremely important. So wait for the trade. This is educational probability analysis only, not guaranteed prediction. Current price is 5075. Market condition resistance testing zone. Price is sitting near major resistance 5080 area after strong NFP volatility recovery. This zone usually decides short-term direction. Bearish probability 55%. Why bearish slightly higher? Strong NFP, USD strengthen. Price already made strong recovery. Resistance zone approaching. Liquidity above highs likely targeted. Possible scenario, price may touch to 5080 zone and show rejection. Possible downside levels 5055, 5050, 5020 if strong selling appears. Bullish probability 45%. Why bullish still possible? Means post news retracement moment. Buyers currently defending short term support. Liquidity above resistance may trigger breakdown or breakout. Possible upside levels 5080 breakout, 5100, 5120. Gold has now reached 5082, which means price is testing and slightly breaking the major resistance zone 5080. This is very important moment because this level decides whether the breakout is real or fake liquidity move. Oh, rejected. You can take sell entry here because price is rejecting. This shows rejection is still active. Market is testing whether breakout is real or fake. This is a classic breakout, retest or rejection phase. There are two possible professional interpretations. Holds above 5070 to 5075 zone. Buyers step in again. Price moves back above 5080. Breakout can become valid. Upside targets may active 5100, 5120. And bearish rejection scenario is fail to recover above 5080, breaks below 5070, shows strong bearish candle, resistance rejection confirmed, downside movement possible. You can take short position here. Our trade has been executed. Hello traders. Today we executed a professional sell trade on gold at 5080 resistance zone and the trade successfully reached our target profit at 5060. The major resistance zone 5080 was a strong resistance area where price previously reacted. Market approached resistance after strong upward movement, high probability of seller activation. Liquidity grab setup. Before the sell entry, price slightly broke resistance. Breakout traders entered buy positions. Institutions likely collected liquidity. And this is a classic smart money trap. And again, price come to 5051. That is the support zone. Current market situation, gold has moved down to 5050, which is a very important intraday support level. This level is psychologically and technically strong because price often reacts here after volatility moves. After rejection from 5080 resistance, sellers pushed the market down and price reached support. This confirms seller had strong control. Now market is deciding whether to continue bearish or bounce from support. Break below 5050 strongly shows strong bearish candle close, selling momentum increases. Possible target 5020 and 5000 is the psychological level. Gold is currently testing the 5050 support level. This is a major decision point. If support breaks, bearish momentum may continue. If buyer defend this level, we may see short-term recovery. Gold has slightly broken below the 5050 support level and is trading around 5048, 5047. This shows sellers are trusting support strength. Market is entering a potential bearish continuation zone. Seller dominance is increasing. Stop loss below support getting triggered. Liquidity being captured. However, we must wait for confirmation because support breaks can sometimes become fake breakouts. Sustain below 5050 shows strong bearish candle close. Momentum continues downward. Possible downside targets 5020, 5000 psychological level. Quickly moves back 5050 shows strong bullish rejection. Buyers step in aggressively 5070, 5080. Okay. All right, traders. Let's wrap for today. Target successfully achieved. Trades executed with discipline and the market respected our plan. Remember, trading is not about trading every move. It's about waiting for the right move. Today we stay patient, followed our strategy, and the results speak for themselves. Now it's time to relax, enjoy the moment, and appreciate the process. Consistency is built one discipline, trading day at a time. Stay focused, stay humble, and stay hunger to learn. The market will open again tomorrow with new opportunities, and we will be ready again with the same discipline and mindset. This is Vaivamm Capital. where we don't chase profits, we build professional traders. Enjoy your day, stay safe, and see you in the next session. Bye bye.